What's up, what's up, what's up, my mind, your money business folks? Is me yet again with breaking news. The Federal Reserve has cut interest rates on November 8th, or November 7th for you. It's the 8th for me. It's Friday here, Thursday in the mainlands. The interest rates were cut by the Federal Reserve by a quarter point, people. That's a great thing for us investors. Yeah. Money is now cheaper to borrow, to finance things for businesses. It pushed more money into the economy. Stocks rose yesterday to all-time highs. They're rising again today. Great, great, great. So let's see what CNBC has to say about this. The Federal Reserve approved the second consecutive interest rate cut Thursday, moving at a less aggressive pace than before, but continuing its efforts to right-size monetary policy. In a follow-up to September's big half percentage point reduction, the Federal Reserve Open Market Committee lowered its benchmark overnight borrowing rate by a quarter percentage point, or 25 basis points, to a target range of 4.5% to 4.75%. The rate sets what banks charge each other for overnight lending, but often influences consumer debt instruments, mortgages, business loans, such as mortgages, credit cards, and loans. Markets had widely expected the move, which was telegraphed both at the September meeting and in follow-up remarks from policymakers since then. The vote was unanimous. Music to my ears. I love to hear this. Unlike the previous move that saw the first no vote from Fed governor since 2005. This time, Governor Michelle Bowman went along with the decision. Great. The post-meeting statement reflected a few tweaks in how the Fed views the economy. Among them was an altered view in how it assesses the effort to bring down inflation while supporting the labor market. That's very important. Inflation has to come down because we don't want it to just trigger and start to go back up. Then interest rates goes back up, and it makes it harder for everyone to live. You know, to, like it says, for credit cards, mortgages, and loans, right? The committee judges that the risks to achieving its employment and inflation goals are roughly in balance. That's a good thing. The document stated a change from September when it noted greater confidence in the progress. So recalibrating policy. Fed officials have justified the easing mode for policy as they view supporting employment becoming at least as much of a priority as arresting inflation. Arrest that inflation. The statement slightly downgraded the labor market, saying conditions have generally eased and the unemployment rate has moved up but remains low. The committee again said the economy has continued to expand at a solid pace. Officials have largely framed the change in policy as an attempt to get the rate structure back in line with an economy where inflation is drifting back to the central bank's 2% target, while the labor has shown some indications of softening. Fed Chair Jerome Powell, who President Trump doesn't like too much, has often spoken of recalibrating policy back to where it no longer needs to be as restrictive as it was when the central bank focused almost solely on taming inflation. Yeah, we need to get control of inflation, not taming it. Okay, there is uncertainty over how far the Fed would need to go with cuts as the macroeconomy continues to post solid growth and inflation remains a stifling problem for U.S. households. Now, I think the Feds are going to meet again in December. Possible rate cuts again, quarter basis point. That would be great, right? I think so. Okay, gross domestic products grew at a 2.8% pace in the third quarter, less than expected and slightly below the second quarter level, but still above the historic trend for around the US at 1.8 to 2%. Primarily, tracking for the fourth quarter is pointing growth around 2.4%, according to the Atlanta Fed. This is good, people. This is good. Good. Okay, President-elect Donald Trump scored a stunning victory in Tuesday's election. Economists largely expect his policies to pose challenges for inflation, with his stated intentions to punitive tariffs and mass deportations for undocumented immigrants. Yeah, a lot of these immigrants are the ones doing the work. Okay, in his first term, however, inflation held low while economic growth outside of the initial phase of COVID pandemic held strong. Still, Trump was a fierce critic of Powell, he doesn't like him, and his colleagues during his first stint in office, and the chair's term expired in early 2026. Central bankers steer clear of commenting on political matters. Smart. But the Trump dynamic could be an overhang for the course of policy ahead. Okay, pace for future cuts. Okay, questions have arisen over what the terminal point is for the Fed, or the point at which it will decide it has cut enough and has benchmark rate where it is either pushing nor holding back growth. Traders expect the Fed likely will approve another quarter point cut in December. I question it. Then pause in January as it assesses the impact of its tightening moves, according to the CME Group's Fed Watch tool. Okay. The FOMC indicated in September that members expected half percentage point more in cuts by the end of this year. So if that's the case, if they stick true to that, then we should get another 25 basis point cut next month. And then another full percentage point cut next year. That's what they are expecting. Not bad. The September dot plot of individual officials' expectations pointed to a terminal rate of 2.9%, which would imply another half percentage points of cuts in 2026. So this is a good thing, people. Even the Fed lowering rates, markets have not responded in kind. Treasury yields have jumped higher since the September cuts, as have mortgage rates. Yeah. The 30-year mortgage, for instance, has climbed about 0.7% to 6.8%, according to Freddie Mac. The 10-year Treasury yield is up almost as much. But the Fed is seeking to achieve a soft landing for the economy in which it can bring down inflation without causing a recession. That's the most important thing. We do not want a recession. So they have to do this smartly. And I believe that they are, and they will. Okay, the Fed's preferred inflation indicator most recently showed a 2.1% 12-month rate. Though the so-called core, which includes food and energy and is generally considered a better long-run indicator, was at 2.7%. And that is all. Let me see what the stock market is doing today. NVIDIA, the market is going to close in about another 50 minutes. NVIDIA appears to be up. Okay, why did you stall out on me? Oh, so Yahoo is having issues. So NVIDIA, I go to Google, my friend Google. NVIDIA currently is up $2.71 at an all-time high of $148.32 currently. And NVIDIA is still holding as the most valued company in the world. That's great. What is Apple doing? Apple stock. Apple is up $4.74 currently. 2% gain today. Tesla. Let's see what Tesla is doing today. Tesla had a nice run these last couple of days, especially yesterday. The stock went up, I think, $36. Today is up $9, over $9, another 3% gain today. What is my SPLG ETF doing? SPLG is up at an all-time high. It's up 59 cents. $70 is the most it's ever been. The highest it's ever been is $70.12, and currently it's at $70.10. But the market hasn't closed. It could go up even more or down. My FTEC stock is up $3.62 currently, but almost a 2% gain, up to $185. That's great. Both of these, SPLG, FTEC, for me, are up over 20% year to date, which is a great thing. But before I end, I need to say this. Disclaimer, I'm not a financial advisor. All content provided on this channel and videos is for entertainment purposes only and reflects my personal opinion. So before you invest any of your money, please consult or talk with a financial advisor. So yeah, that is all I have to say, you guys. Good luck. The Fed's cut rate, which is a great thing. Peace out. And I hope you're investing. Later.